Let's take a look at last week's market action and what to expect this coming week, April 7th, 2014. Euro should continue to decline on inaction of the ECB. Gold expected to give back short-term gains, and U.S. data kicks off with retail sales on Monday. Let's take a quick look at what happened in the global markets last week and what we need to be aware of for the upcoming week. Markets ended the week deep in the red. At the end of the day, the Dow was down 160 points and Nasdaq closed down 2.6%, and the S&P 500 ended the day down 1.25%. Employers added 192,000 jobs last month, while unemployment remained at 6.7%. Analysts expected 200,000 jobs to be created and unemployment to drop to 6.6%. January's non-farm payrolls report was revised up to 144,000 from 129,000. Attorney General Eric Holder said the Justice Department is investigating whether high-frequency trading violates insider trading laws. This comes as both the FBI and the Securities and Exchange Commission confirmed this week that each has ongoing investigations into high-frequency trading. In other news, ISM reported that the manufacturing sector in the U.S. accelerated slightly in March. The ISM Manufacturing Index rose from 53.2 to 53.7 in March. Meanwhile, the ISM reported that its U.S. non-manufacturing gauge for March rebounded from 51.6 to 53.1. Levels above 50 represent expansion, while levels below 50 represent contraction. Elsewhere, the ECB kept its benchmark overnight interest rate steady at a record low of 0.25%, as was widely expected. Speaking to journalists after the policy decision, ECB President Mario Draghi said the central bank does not exclude further monetary easing. He also said that the ECB officials were unanimous on using unconventional policy tools if necessary, including quantitative easing. The ECB has kept monetary policy extremely accommodative amid low levels of inflation and high levels of unemployment. The Chinese government released its official manufacturing PMI for March. The index edged up from 50.2 in February to 50.3, close to expectations. At the same time, HSBC's manufacturing gauge for China, which measures smaller firms in the country, edged down from 48.1 to 48, also close to expectations. Levels above 50 represent expansion, while levels below 50 represent contraction. European markets finished higher on Friday, likely fueled by the European Central Bank's pledge yesterday to do some sort of quantitative easing if necessary. Asian markets ended the week mixed. China's benchmark Shanghai Composite rose 0.7%, while the stocks in Singapore dropped 0.3%, and the Nikkei was little changed. In the foreign exchange market, the dollar rose to a fresh one-month high against the euro Friday as currency traders took the latest U.S. employment reading as confirmation of an improving economy. The euro slid 0.1% against the dollar to 1.3705. The common currency had reached 1.3672 in intraday trade, its lowest level since February 27th. U.S. job creation in March was largely in line with estimates, suggesting that the Federal Reserve is likely to stay the course in trimming bond purchases every month, moves that have been supporting the dollar. The euro has been weakening against the dollar amid expectations that the European Central Bank would take measures to stoke growth in the eurozone. The ECB on Thursday opened the door to easing measures such as a cut in interest rates or a bond buying program to stimulate the economy. Moving to the commodities market, gold clawed back this week as bargain hunters entered the market following recent losses. The recent $112 decline in prices was a short-term reaction to the Fed's hawkish outlook for interest rates laid out in the last week's meeting on March 19th. However, gold is not at risk of falling into a major downtrend or hitting new lows below the cycle low at $11.80. Oil prices slumped this week amid hopes that some of Libya's shuttered production could come back online. Earlier in the week, Brent fell to a 5-month low below 104, but prices rebounded after rival sources claimed that there was no compromise with the government and that the oil ports would not be reopening. This is Amy Anderson from Option Rally signing off. Watch for some exciting changes to Option Rally TV coming later this month. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great week.